We're continuing our rock and cool virtual summer vibe. And today in our studios, we'll be discussing something that ordinarily people who don't know much about this topic will say, oh, okay, well, it's okay, cool, standard topic, but it's not a standard topic. It's a very, very important topic. It's one that honestly, maybe a week ago, a month ago, even a couple days ago, I didn't fully appreciate how important it was to what we're doing. We'll be talking with Raymond Zenkich from Evertas. He's the president and CEO of Evertas. Evertas is the first company in the world that is providing insurance to protect crypto and digital assets and blockchain users, blockchain systems users. And so Evertas, the role they're playing going forward, as I see it, is they're going to create, they're going to chill the noise. They're going to calm the noise, the chaos of the 2017, 2018 ICO scam period. And they're going to just sort of bring some calmness, some Zen Buddhism to our whole big thing we're doing here. And obviously, if they can quiet some of the risk down, that's better for all of us. We will be able to scale investment. And look, we're in the business. We're in the VR business. We have a project and a product that some will say, okay, cool, gaming, VR gaming, but it's not. We're doing a lot more, especially in this COVID period. The whole VR industry has accelerated immensely due to the fact that many companies now realize they need to have VR as a service. They need to have VR content as a service. And so that has pushed our whole business model into different areas that we didn't foresee before. So now we realize that the new value that will be created in this whole industry is immense. But we need to have our investors feeling safe and secure, comfy and cozy, let's say. And so let's welcome Raymond Zenkich, President and CEO of Evertas, to our studios. Raymond, welcome. Good morning. Good morning. Raymond, you heard my intro. Obviously, I love this whole crypto insurance thing. And when we finish in 35, 40 minutes, I hope that our viewers also will be loving this thing as much as I. And also, I hope they'll realize how vital this is to what we're doing, this whole big blockchain thing. And I'm just going to call it the whole big blockchain thing. Trademark. I think I just made that up. And so what I'd like to ask you right now is, we all know auto insurance, fire insurance, flood insurance, whatever it may be, but you're talking about insuring things that in a sense don't exist. They're virtual. How does what you're doing, underwriting these digital assets, these crypto assets, how does that differ from insurance as we know it, as we knew it?
No, great question, Brian. Again, thank you for letting me join you today and speak to your audience and really describe what we think is really needed today, which is building out a reliable insurance infrastructure for digital assets. So crypto assets, for example, tokenized assets going forward, virtual or digital assets that you're describing as well at Sensorium. So what we've spent our time working on for the last, it's 3 years now, is the world-leading underwriting framework to assess the risk of digital assets. So the challenge is that today, insurance companies have a very hard or difficult time to really understand the risk associated with digital assets or crypto assets. And when we started this 3 years ago, our backgrounds were really well suited to address this problem. We have people with deep expertise in blockchain at a technical level, as well as custodian experience, also deep insurance product development experience, rolling out new products. And I would also add the forensic accounting needed to do this type of underwriting. So for us, we're trying to solve this problem where the market right now is over $250 billion in terms of cryptocurrencies today, which is one type of a digital asset and one type of a crypto asset. So, and this right now is roughly September in 2020.
Right.
The amount of capacity, that is the amount that insurance companies today are willing to sort of provide insurance for, is a small fraction. It's less than 1%. It's roughly $2 billion. So this gap in terms of demand, what the market is asking for, and what the insurance companies are able to provide is significant, and it's growing. And to help address this gap, we've built out, as you mentioned, and we've done, which is an underwriting framework. It's extensive. It covers over 16 categories. And rather than any individual category like key management, for example, or business ethics, we look at a combination of risks, of what's known as threat vectors, to really help the insurance community and the insurance industry understand the risk, be able to price it correctly, and to be able to provide that really badly needed insurance. I'll give you a couple of examples
please.
of the insurance that is needed. So for example, you and perhaps some people in your audience, you may actually own or have crypto assets, maybe Bitcoin, for example, or Ethereum. And as you know, these assets are digital bearer assets, which means that whoever owns the private key, they have full control of that asset. And a lot of people today, it's becoming increasingly common to allow someone else to hold that cryptocurrency for you. So a large exchange or a custodian of some type. So you're giving them, they now have care, custody, and control of the asset of the private key. So the question that comes up is, and by the way, there are other things you can do. You can have like a USB thumb drive or even a paper wallet. Those have other risks associated with them. But as we think as the market matures, people will increasingly go to institutional type custodians or exchanges. Well, you could imagine a scenario where maybe there's a rogue employee at one of these exchanges, and they're able to, despite all the security efforts involved, they're able to take a private key that actually represents your assets, and essentially steal it. In that situation, most people would expect to be made whole in some way, right? You had an internal theft, my assets were taken, you're going to make me whole. And that's quite, I would think in the physical world, quite normal understanding. And by the way, insurance has been around for hundreds of years. It's about risk transfer, right? And so this is a classic example of a risk. And banks, to use a banking example in the real world, they have insurance, like, for example, vaulting insurance. If someone is storing, let's say, gold at a vault, there's insurance. And by the way, the rates are based on, how difficult it is to access or move whatever's in the vault. So in this example, there is no, well, in the US at least, there are no regulatory requirements that custodians have insurance for these type of assets. Or exchanges, I should say. So that's always been new to people when we tell them that, because your typical frame of reference is, say, a bank, where if there was a theft, someone got into the bank vault, stole your cash. Although today most of this is digital, but to use that example, you would think I'll be made whole, right? There's even FDIC insurance in the U.S. where if banks are insolvent, that you're protected to a certain amount of assets that you hold there. So the real question becomes, what does the market expect? What do retail customers expect? What do institutional customers expect? And increasingly, there is an expectation that there is some type of insurance against this theft or loss of the private keys. And so that's where we focus our energy, is what is the level of underwriting, the amount of knowledge around the risk you need to have insurance companies be more comfortable with the risk. That's what we've been focusing on, and it's been very well received. There are people in the space currently, but as I mentioned, that's not supporting enough insurance capacity, and we're working with them to try and get more capability out there, build out this infrastructure. Because we'll give you an example. There are institutional investors, so think large funds, who will allocate a small percentage of their portfolio to these types of assets. And they have risk committees. They can only invest under certain conditions and requirements, one of which is, if they're going to place this money with an exchange, to know that that exchange, that counterparty, has some risk. If there is, like an example of a rogue employee.
Right.
We know of examples where they have not been able to make the investments they wanted to because that insurance was not in place. And so, look, we think that a really important role that insurance plays in almost any market that it's been involved with.
Mm-hmm.
Oh, this is my phone. Excuse me one second.
This is it. That happens.
Is really a way to minimize risk, right?
Right.
And so in doing that, you seek out standards. You want to professionalize. You want to make it more mature, the risks that you're looking at. So in this case, what Evertas is focused on through its underwriting is, in a way, creating a set of standards.
Right.
Standards that will help improve the overall level, we would think, of professionalism and responsibility and good actors in this space. And again, building out this infrastructure is where we focus all of our energy for the last 3 years.
Right. Thank you. That's very excellent explanation. I actually just said a couple things that I didn't really think about prior, even through my own readings. Now, and it led me to this, let's say, simile or metaphor? Metaphor. Metaphor. Which one is the one with like? That's a simile, right? Like as. Yeah. The little grammar lesson here. That to me makes me think of, you go to an amusement park, okay, with your family. So the family is the investor. And you mentioned that some of these institutional investors have they're ready to allocate some resources for crypto and digital assets. But obviously they're looking at where is the lower risk. So go back to our family at the amusement park. And we look at the roller coasters. And we have, $100 this day to spend on riding roller coasters. Now, are you going to put your kids on the roller coaster without the safety belts and that thing that goes across your chest? Or are you going to go on the roller coaster that has the safety precautions, the safety measures? So in a sense, now you have this massive, beautiful roller coaster with 5 loops, and it goes backwards and forwards, and it's, makes stuttering stops and scares the hell out of all the riders, but they fly out. Some of them fly off the roller coaster. You have a kind of boring one.
More exciting, that's for sure.
Yeah, it's very exciting, but you survive and you go, whoa, that was cool. You're so excited you get a tattoo of that roller coaster. Say, I survived that. And now, but then next to it you have a less crazy roller coaster, or maybe one just as risky and crazy, but it's loaded with safety precautions. Where are we going to put our money? We're going to put it in that roller coaster. And most heads of families would, I think, unless their kids have really annoyed them, will put their kids onto that roller coaster. So in a sense, this is leading me to the guys with the safety precautions on the roller coaster are going to probably in the end make more money than the guys with no safety precautions. And would you agree that the more we can begin to underwrite, the more that we can sort of, in a sense, solve what you mentioned, I'm going to call it a crisis of insurance capacity. The more we can solve that, the sooner we can get in. You say these people with bits of money, bits of resources to invest in crypto and digital assets will be able to expand without risk into more dynamic projects, blockchain projects. Would you agree that what you're doing is accelerating scalability of the blockchain in general?
I mean, absolutely. I mean, nothing is without risk. So I would say what we're trying to do is manage and mitigate that risk. So to the extent that insurance is going to be a necessary requirement for this industry to grow.
Right.
Right now, it is a obstacle to adoption by institutions. I think increasingly the retail market will also want to, will expect insurance of some type for their assets. And so our core belief is that the institutions who are, let's say, mature, trying to do the right thing, they are all actively trying to solve this insurance problem. Yet, to kind of use your description, there's this crisis of capacity. And so it is a challenge to sort of get an entire industry, in this case, the insurance industry, to be more comfortable with the risk. It's new. And even though it's new, there are some similarities to other existing markets. And there has not been a lot of data.
Right.
So, by the way, data is one area we are focusing a lot of our energy, is to make sure we can understand the frequency and severity of known losses to date. And in the insurance world, those are two really important components to know. How often has money, let's say, been stolen or lost, and what amounts? Because that informs what's called the actuarial work that helps drive pricing. And so right now, that data isn't available. We are in the process of collecting and having what we think is a very sound database to rely our actuarial work off of. But ultimately, it is going to be the industry as a whole recognizing that we do need to have a robust understanding of the risk to help expand the capacity. Because right now, I'll give you some examples that highlight this this lack of capacity. There are, as many of you people in your audience may be familiar with cryptocurrencies, and for some of them, or when you have to create them, you mine them.
Right.
And there are data centers set up in very exotic, oftentimes cold locations to mine, let's say, Bitcoin.
Right.
These are data centers like you would see anywhere throughout the world. What's unique about them is what they're doing on the servers. The people who run these mining operations have a very difficult time obtaining straightforward property insurance. So just insurance as a business in case there is a flood or some kind of damage to the equipment. So just looking to get the replacement value of the servers.
Right. Yeah.
The fact that these companies operate within, or they have the label of crypto attached to them, it's very, very difficult or very, very expensive for them to get insurance. So that can't be the right answer ultimately in the long term. So what we're doing is we actually do have a product that we've come to market with that helps solve this problem. But again, it's not enough capacity. There isn't enough of the insurance available to satiate the demand. And the demand has been increasing. So for us, we are in contact with a lot of people in the industry who are, who have relationships with people seeking insurance. And the continual refrain is an inability to provide the levels of coverage needed. So that isn't good for an industry.
No.
So our goal is to try and get the industry to recognize this problem and to support this insurance infrastructure that we're building. And our underwriting is the first step in the right direction. It's a way to create a very robust way to assess this risk, and in some ways, remove some of the clouds, if you want to call them that have been sort of over, in some respects, the crypto industry. This is for example, one of the, as I mentioned, we have 16 categories. Ones that are very technical would ring true to a lot of your audience members who are technical, like key management, right? How do you manage, store, move, just handle the key technically as well as with your processes and procedures? But we also focus on things like business ethics, excuse me. That's equally important.
Of course.
Understanding, for example, do you do criminal background checks on key employees? That, in some respects, the technical solutions that are being developed continue to improve. We update our underwriting every month, and the technical pieces are getting more and more robust. Nothing is perfect. But what we found is that it's really, and if you look at the types of losses and how they've occurred, it's really the human aspect. It's weaknesses in terms of how you people are interacting with systems, or how passwords are being maintained. It's the password on a Post-it note on your monitor, for example. That isn't a real example. You can sort of get your head around that. That's where increasingly a lot of the issues lie.
So in a sense, what you're doing, you're creating ISO for obviously, I come way back years ago from a brewing background. And obviously, our goal was to make a beautiful beer, which we did. And then we sought further investment. And the first question that this large brewer from South Africa said, are you ISO regulated and are you up to the ISO standards? And at that time we weren't. And so from the point of view of figuring out, working on expanding capacity, that's up to you guys. That's up to you, your partners, your company, Evertas, and other people within this industry. But in terms of companies like Sensorium and our product, Sensorium Galaxy, and other people seeking investment in our virtual products and into our crypto and digital assets, we need to understand, these these areas of risk. We're so deep and so involved in our process that there are things that we don't see. Like you said, putting the Post-it note on the computer. Yeah, maybe that's convenient for us, but obviously that's not good if you're an investor. Where's your key? Where's it written down? Oh, it's on the Post-it. It's one of those Post-it notes over there. Not a good thing. Not very, doesn't build trust. So,
right.
Are these questions you mentioned, these areas of risk, are they open to? For me, can I go onto your site and then find them? Or are these proprietary? Are these things that you use once you sign an agreement with a potential client, you then share that with them? Or is this something that, because I understand that you need to also build consumer demand. So we need to be informed in a sense. You've convinced me that this is needed. There's many people who are maybe watching today who don't truly understand the need for this. But I honestly see this as being, if you get your crypto, your digital and crypto assets insured, you've gone through, in a sense, a due diligence, and you open yourself up to deeper pocketed, better, greater investor. And is this something that can be shared with people watching or consumers?
So our underwriting framework, it is proprietary. Yeah. We've invested a lot of time, energy, and resources in developing it. So yeah, our underwriting framework itself, that is proprietary. As I mentioned, 16 categories, several hundred questions. Actually, right now, just under 1,000 questions. Wow. The reality is, it's the questions themselves are really only tell half the story. It's really how we view the scoring, and the rating of those questions. That's really incredibly powerful, because that's where we apply all of our insight, is to know, okay, if a question is answered this way, what we've done is for every question, we've identified a difference between a required response. Something we want to see certain responses, right? Right. And so that in itself is incredibly powerful to us, to know what the right answer is or a better answer is. That helps with our underwriting. So for that reason, it's not available publicly. We have shared, in certain formats, some of the categories, for example, because it's very hard to kind of re-engineer or reconstruct what we've done from that. But I just wanted to come back to one point you mentioned, because it reminded me of a conversation we had a couple years ago. You mentioned ISO. So right now, our underwriting framework, we're not trying to duplicate other standards that are out there. And in fact, we will actually reference other standards where a lot of hard work has been done to codify best practices through standards. So we will leverage those. There are certainly areas that are unique and that we are fleshing out that we think will lead to a new set of standards coming out to the market that implicitly will help make the industry more secure. However, we've had discussions with institutional investors, and it was really interesting to hear them talk about their experience in talking to exchanges and custodians. Right. What they ended up saying was, look, we don't have the technical team that Evertas has, or even other people have in this space. But the one question we can ask that really cuts through everything is, do you have insurance?
Uh-huh.
Because that, in a way, becomes a proxy for them as an investor and for their risk committees, for that matter,
Yeah.
to know that there has been some vetting of the risk or some understanding of the risk, and some minimum threshold has been passed, by an underwriter,
Right.
For that company. So that was very interesting to hear the exchange, the investment group say, that's one of the reasons we asked that question, because it tells us, has someone else really vetted them from an underwriting perspective? So, and it is increasingly being asked. I may have mentioned earlier, but we know of situations where investment funds have in fact been unable to invest in this asset class, in the digital asset class, because of a lack of insurance.
Right. Now
Excuse me.
Understood. Now, I would like to actually, as you know, we are a virtual reality. We're creating a virtual reality content hub called the Sensorium Galaxy. And from what you're saying, virtual reality is sadly in many people's eyes just this gaming thing, or it was the Matrix, but it's because of COVID-19, the whole industry, the whole need for virtual reality has accelerated. Many companies that were considering it was just sort of something that they were talking about, tossing around, are now, approaching us and approaching others and saying, we need some virtual reality options. Can we get our team building virtual reality? Can we, medical checkups and stuff like that through virtual reality? And so we're creating this content hub. Now, my question is, going forward, there's something 2 to 3 years from now, maybe even hopefully next year, you'll see something called digital immortality, where, let's say, Raymond, you go into, you immerse in the virtual world, your avatar, you embody your avatar, you're walking around, you're hanging out, and then you're done. Okay, you're done hanging out, you're done going to a concert, you're done maybe you're dancing, in our called Motion Planet, or our music planet, which is called Prism Planet, and Prism, not prison, Prism. And I just heard prison for some reason, and we don't have that. And so now you go home, but your avatar, thanks to artificial intelligence, continues to hang out and socialize with other avatars. And in a sense, your avatar is creating new friends and creating new experiences for itself. So when you go back, your avatar might introduce you and say, oh, hey, I know you. And the avatars have developed a relationship. So what this is going to lead to is these digital influencers. So let's use the example of my beloved Bruce Springsteen. And imagine he's now created a Bruce Springsteen avatar, and he's doing live concerts. And then suddenly someone who loves Bruce creates a Bruce Springsteen avatar from 1985 and goes in there and is doing virtual concerts playing Bruce, Born in the USA. Now, that becomes an issue for Bruce Springsteen, the real one. That becomes an issue for, I believe, Columbia Records. Is this somewhere do you see that you'll be underwriting going into this virtual today's world is moving virtual. Do you see yourself, Evertas, in this whole underwriting industry going into this virtual world? And if so, do you feel that with the acceleration of virtual reality technologies, this will also expand your business? I mean, really just blow it up in a good way.
Great question, Brian. I think that, like digital assets, the whole world of VR is moving incredibly fast. And so things that, you and I are only imagining today might be even surpassed in a couple of years from now.
Yeah.
But much like the experience with digital assets and the physical world, with which we're most familiar, there's certainly carryover or similarities, I would say. Perhaps significant amount of overlap. Look, there is legal precedent for a lot of these issues, for risks that they're being addressed. For example, in the digital world, you have a similar concept of vaulting that you have in the physical world, like if you have a gold vault or cash in a vault.
Right.
And I would say there's probably a large overlap of things that will overlap into the virtual world as well.
Right.
For example, things like brand protection, right, or brand impairment, or trademark or copyright infringement, or lost revenue if the platform my avatar is on is somehow down and I'm not realizing revenue. So I think there are a lot of similar risks. That, as I mentioned earlier, insurance is all about risk transfer,
Sure.
and there will be some very similar risks that will be needed to be addressed in the virtual world with the avatar you gave. But there'll be new risks, and that really is core to our DNA, to Evertas's DNA, because that is where a lot of new and exciting thought is going to have to be developed, and underwriting will have to be developed.
Wow. Yeah.
And there is a real challenge, I'd say people and talent challenge, that if you think about your team, or I think about the Evertas team, it's very unique.
Yeah.
And will those people be comfortable at an insurance company looking at underwriting? Probably not. And so I'm going to go out on a limb and say probably not. And so
probably.
And that does become a problem. It's also a bit of the challenge. So there's a human aspect, a human side to all this as well. So that to us is also the exciting part. But let's assume there's 80% overlap or even 90% overlap between the risks that you see today that would somehow could extend quite naturally to the virtual world. There's still this 10%, let's call it, it's going to be new. Things that we can't even think of perhaps today. One example that, comes to mind might be your avatar that is existing virtually harms another avatar.
Sure.
And let's just keep it simple, say that somehow it impairs the revenue generation of another avatar.
Yeah.
That's really interesting, right? And who is being harmed, who would actually own the insurance policy. Ownership in that case of the policy is quite interesting as well.
Yeah.
So these are all things that will evolve. I think it will take, innovators at insurance companies. Many of them have innovation arms that do try and look at these forward-thinking or forward-looking risks. That's where we specialize.
Yeah.
And so to answer your question, it's certainly going to be an area we pursue. I would say the one that comes to my mind that's not the avatar example you gave, but a little more tangible to us would be looking at other tokenized assets.
Right.
So let's think about real estate. Again, there is going to be a large amount of overlap in the types of risks that those tokenized assets will hold, but there will be new elements as well. And that's where we're going to focus our time and energy, because if you think about whether it's tokenized assets around real estate or the avatar example you gave, if there's a point in time where the inability to address real risks is going to impair or sort of hurt the growth, that's the problem. And unfortunately, it's not Sensorium who can solve that. Right? You can't solve the insurance problem in the virtual world. It's going to take people from the insurance industry looking at the types of risks and designing the products that help address the risk, and also at a in a price that sort of makes sense for the creators.
Yeah, I mean, absolutely. And just to give a shout out to Sandra Rowe of the GBBC, Sandra, Evertas, yourself, Sensorium, we're all pioneers in this blockchain thing. And as you said, something you mentioned was that there's an existing world, there's an existing infrastructure which is being brought into this. And so I think you said there's something about 90% of what you are looking at, best cases, best use, best in school, and then it's the 10% or the 20% of the unknowns of this big, amazing new technology, which has actually been around since I think 1990. No one paid attention to it until the Bitcoin. But we're the pioneers, we're trailblazing, and in a sense, until really you guys can get this thing really pushed forward and get this capacity issue solved and understand fully what the new risks that we're creating, because we don't want to be limited. We want to create as much risk as possible, in a sense, because new risk is innovation. Sure, some risk can be bad. But I think in terms of our project, we're going to push that envelope, and we need you guys to assess, is this doable, is this good, and can someone invest in it and help us, create the energy to push that envelope. And I mean, it's an amazing, exciting place to be in. And so I'm going to actually probably lead us into our wrap up and ask you, we've had an amazing conversation. I feel that we have sold, you mentioned that some of my colleagues might not necessarily understand the need for insurance, crypto insurance. I think we may have sold them on this. I think they will now understand it better and realize that it will help us. So that said, where is Evertas going to be in 1, 2, 3, 5 years? And what are you doing? What are your plans for between now and the end of this COVID, world? Everybody gets a vaccine and we can go back out shaking hands and, not having to wash your hands every 3 minutes or something like that. Where are you guys going to be?
Yeah, so Brian, we are focusing our energy on, as I mentioned earlier, getting a greater amount of insurance capacity available to the market, building out the insurance infrastructure that we know is so badly needed.
Right.
So we're working with great companies today, many of whom are in the space. They want to do more, and we're working with them to try and make that happen. Mm-hmm. And they are looking to us to help as well, because they realize that it's not going to happen solely in their organization. We are looking at other areas of product development, things that are tokenized, and we're trying to understand how those markets develop. And we are also looking at, as I mentioned, building out the data sets, because data is what ultimately drives pricing and allows us to establish pricing information correctly into price for the market.
Right.
So it's all about getting more capacity in the market, finding innovators like Sensorium, like yourself, and others who are thinking about these new risks related to digital assets or virtual worlds, where insurance is going to be part of the solution. And that, again, is core to our DNA. And we find it is incredibly exciting time to be both in the digital asset space as well as insurance.
Right. By the way, I don't know this. I haven't asked this. Do you guys have your own token at all? Or do you have any plans to make a token?
No, we don't. We actually made a conscious decision not to have a token, nor we have no plans on having one in the future.
And honestly, that kind of lends a little bit more, I would say, stability, institutional stability to what you're doing.
Yeah, well, we made a conscious decision to kind of focus on the core economics of our business, and that didn't include tokens.
Sure. I mean, really, it's kind of, it's like telling the guy who loves beer, go in and taste the beer. Just, keep them separate, then good, bad, because obviously you need a, what's it called? An unbiased opinion of it. And if you're in the crypto world, it might be a slightly biased opinion of what's going on.
Yeah.
Okay.
And the one other aspect I'll mention real briefly that we continue to look at is looking for innovative ways to provide capacity. So, look, there are a lot of solutions available in the market.
Sure.
We are assessing them all the time. So there'll be some announcements end of the year that we're looking forward to making.
Right.
So look forward for those. And we're excited about what the future holds.
Okay. Raymond, thank you very much. I'm going to wrap this up now. It's been a pleasure speaking with you. Honestly, it's been informative, eye-opening for myself, and I hope many. And again, thank you for bailing us out. We had a situation where we needed to get a speaker in fast, and you were extremely accommodating, and just really hats off. Thank you very much, Raymond Zenkich from Evertas. Raymond, thank you.
My pleasure. Thank you, Brian. I appreciate the time.
Thank you very much. Okay.
Thank you.
Thank you. Okay, ladies and gentlemen, today we had a very interesting conversation with Raymond Zenkich of Evertas. He's the president and CEO of Evertas. And honestly, it was very informative. And for those of you who thought, oh, insurance, guess what? Insurance is cool. Insurance is happening, especially because it's crypto, digital insurance, because that's what we're all doing here. It's this big, I forget what I said in the beginning where I trademarked, but it was the big, wild, great blockchain thing. Who knows what I said in the beginning. And Sensoriumlive's rock and cool virtual summer vibe continues. We'll be having a couple more episodes in August, but you know what? August isn't forever. August will end, and then we go into September. And guess what? Then we're going to be starting off with a rock and cool, but comfy, cozy, and warm Sensoriumlive virtual fall. And guess what? We're going to take it on the road. We're leaving. We're not quarantining. We're going to be wearing masks, social distancing, but we're going to take it on the road. Maybe Pittsburgh, maybe MIT, maybe New Jersey, maybe San Francisco, who knows? Maybe your local Starbucks. So, if you see me with a cool camera and some, I don't know, just looking cool, it will be Sensoriumlive in your neighborhood. Thank you very much, everyone. Comments, please come to our site and you'll find out information on Evertas and more about our project, Sensorium Galaxy. Thank you very much and have a nice day.